Bismillah ar-Rahman ar-Rahim. Dear students of 4th year, with you Dr. Adil Hussein. We will complete our course Environmental Accounting. Accounting for natural resources characterized by natural resources such as oil and gold mines and coal fields from other long-term assets as running out of use, as such resources are non-renewable, and due to the characterization of natural resources, the measurement of the cost of those resources and determine the premium depletion of things different and a source of controversy among accountants. The accounting treatment of natural resource expenditures is different according to the type of expenses associated with the resource. The company considers these expenses as expenditure incurred for the period in which they occurred. So, the company treats this type of expenses as current expense. So, the entry in this case will be in the debit side, exploration expenses considers current expense, so it will be in the debit side. This amount is paid cash, so cash it will be in the credit side. At the end of accounting period, at the end of the year, these expenses are closed in the income statement. So these expenses in the first stage it will be in the debit side. When we close these expenses it will be in the credit side, and debit side will be income summary. Example, company operates in the field of oil extraction during the year 2020, spent £9 million on exploration, which led to discovery of oil well. Those output was estimated of 500,000 tons. The company considered these expenses as expenditures incurred for the period in which they occurred. Required, journalize the above transaction. According to the example, the company considered these expenses as expenditure incurred for the period in which they occurred. So all of this expense will be exploration expenses, current expense. It will be in the debit side, cash will be in the credit side. At the end of the accounting period, we will close these expenses in the income statement. So the entry will be exploration expenses firstly in the debit side. Now we will close it, so it will be in the credit side, income summary in the debit side. In some cases, these expenses as capital expenditure incurred at the natural resources account in the event of successful exploration efforts, and to bear the period as expenses in case of failure of exploration efforts as follows. The entry will be in the debit side. There are two accounts. First, natural resources. In the case of successful exploration efforts, exploration expenses in case of failure exploration efforts, cash in the credit side. Example, company operates in the field of oil extraction. During the year 2020, spent £9 million on exploration, and including £1 million didn't result in successful efforts. Required journalized above transaction. To consider these expenses as capital expenditure in the event of successful exploration efforts according to our example 8 million, and considers as an expense in case of failure of exploration efforts 1 million as follows. The entry in this case will be natural resources 8 million, successful exploration efforts, exploration expenses, event of failure exploration effort, cash in the credit side 9 million. At the end of the accounting period, such expenses are closed in income statement. So exploration expense in the first stage it will be in the debit side. When we close it, it will be in the credit side. Income summary in the debit side. 1 million debit, 1 million credit. Depreciated of natural resources. The production unit method is used to deplete the natural resource. According to this method, depreciation is calculated in 2 steps. Step 1. Find the depreciation rate of the unit of the product is as follows. Depreciation rate per unit of product equal depreciated cost divided number of expected production units of the resource. Step 2. Find the depreciation premium as follows. Depreciation premium equal number of units actually produced using the resource multiply depreciation rate from the previous step. Note: if there is any change in the estimates of the units, the quantities expected to be produced, or the net realizable value at the end of the useful life of the natural resource, the depreciation rate per unit of product shall be recalculated, and the new rate shall be used only in the year in which the change occurs, and for the following years, and not used retroactively. Example: one of the specialized companies in the exploration of gas has obtained a concession to explore for oil in one of the sites in the Western Desert for £7,500,000 and amounted for exploration expenses £1,500,000, including £500,000 of the expenses didn't result in successful efforts, and the cost of preparation for production £200,000. The estimated production volume of oil 4,500,000 tons is extracted within 5 years, and the concession contract provides for the restoration of the site to what was before the settlement of the state. These expenditures were estimated at £300,000. Required 1. Calculation of depreciation expense. If you know that the actual production volume during the first year is 500 tons, the second year is 1,250,000 tons, the third year 750,000 tons, the fourth year is 800,000 tons, the fifth year is 1,200,000 tons. 2. Journalize the above transaction. First, the depreciable cost of resources equal cost of acquisition plus cost of exploration plus cost of preparation plus estimated cost to report the site equal cost of natural resources minus estimated selling value equal depreciable cost of resources. According to cost of exploration, you should eliminate 500,000 because this amount is the case of failure exploration. Two, determining the depreciation rate of the production unit. Depreciation rate equal the depreciated value of the resources divided estimated production volume. So 9 million divided 4,500,000 equal 2 pounds per ton. Depreciation expense equal actual production during the year multiply depreciation rate. So for the first year the actual production 500,000 tons multiply 2 equal 1 million depreciation for the first year. Second year 1,250,000 multiply 2 equal 2,500,000 and so on for third year and fourth year and fifth year. Interest to record depreciation. As we explained, depreciation expense in the debit side, natural resources in the credit side. Because natural resources is an asset and depreciation expense will lead to the decrease in this asset, so the natural resource asset and it decreases, so it will be in the credit side. The amount for first year 1 million. Second year the same accounts, but the amount will be a change from one year to another according to the actual production, because depreciation expense equal actual production multiply depreciation rate. Depreciation rate fixed. Depreciation rate fixed, but the actual production is different from year to another. So the accounts depreciation expense natural resources will be repeated for 5 years. The amounts will be changed from one year to another. Now we will begin chapter 4, accounting disclosure on social and environmental performance. Accounting disclosure of social performance. The accounting disclosure of social performance is the method by which the organization can inform the community of its different parts about its various activities with social implications, and the financial statements or reports attached is an instrument to achieve this. Accounting disclosure should be one of the following forms. First, adequate disclosure. The financial statements, notes, and additional information attached shall include all available information concerning to the organization to avoid misleading interested parts of the organization, and after sufficient disclosure of the most important principles of the preparation of financial statements. Second, full disclosure. That is to include disclosure of all available accounting information, which means that the information is shown in large quantities, leading to dumping users of the financial statements with information may not be needed. Third, fair disclosure. It is the disclosure of information in such a way as to ensure that it is equally accessible to all beneficiaries without prejudice to any particular party. The information to be disclosed can be classified as follows: quantitative information, financial. There are four main areas where quantitative information is presented: in the balance sheet, statement of comprehensive income, statement of changes in equity, and cash flow statement. These statements are included in figures reflecting actual or estimated amounts as a result of the financial events of the organization. It is noted that this aspect of disclosure caused a permanent response by the beneficiaries of the published financial statements. The other type of information, non-quantitative or qualitative information or non-financial information. This aspect of the accounting reports is disclosed in a descriptive manner that would increase the user's understanding and confidence in the cash amounts shown in the financial statements, as this information is often linked to quantitative information. Non-quantitative information is disclosed through the main financial statements and through financial statements or marginal notes in addition to management report. Non-quantitative information is appropriate and that disclosure is fruitful, is useful in decision making process. Thank you for listening. Assalamu alaikum wa rahmatullah wa barakatuh.